Now there's a cost to that, and we're seeing the cost to that. When people are investing, one of the biggest mistakes new investors do is they, instead of realizing that there was one little thing, as a hedge fund manager managing, over $100 million, I actually took a lot less risk out over the weekend because.
All right, folks, thank you very much for tuning in again. We've got our infamous guest, Jeff Tomasulo. I love saying your last name, by the way. One of the things I talked to my son about, when the whole pandemic hit and shut everything down, it shut 15 of our conferences down. We had, $2 million in advertising out there, and a potential revenue of $4 to $5 million was just gone immediately. Did it suck? Yes, absolutely. But I also knew that we were okay financially because of the emergency side of this. Right now, with what you're seeing, overseas and the economic situation, what should a person be looking at right now in the market places, and what are some, just heads up for the next, through April?
Well, we talked about the macro. Now, this is more of the micro, right? This is the stuff that I do every day and what I'm seeing every day. And it was a very interesting week because we started off with the S&P 500, the NASDAQ, the Russell 2000, all the market indices, right? Even around the world, the Nikkei, all that. They were much weaker, right? On Monday, it came in and looked like they were going to go and take out the lows that they put in on February 24th, right? Which was when the war was just when Russia invaded, right? The first time. That was when the market was down. The NASDAQ, I think, was down 23% from its 52-week highs. The S&P 500 was down 13.5%. The Russell was down 22%. And then there were certain stocks. Now, Sean, this is a very interesting thing because when you're looking at the market, there were certain stocks within the market that were down. I think the total amount was over 160 stocks and maybe more. I could be off about this number. They were down 40% or more. Wow. And we're talking about stocks like PayPal, Affirm, Adobe, Facebook, DocuSign, Zoom Video Communications. There were tons of stocks in there. There was something interesting also going on in the market on a micro level was Chinese stocks were getting hammered. We haven't seen them down this much since 2008. So Alibaba, Baidu, JD.com, there were stocks like that were down 80% from their 52-week highs. And the reason why was there was this fear that they were going to be delisted, and China was going. China was taking a hard line towards some of these
practices. Yeah,
right. So what happened with a lot of these stocks this week is that we saw a temporary bottom, and when I mean temporary, because no one knows if the market put a bottom in, but what we saw towards the end of the week was that the market started to rally, and it rallied hard, and we went from the bottoms. We're up almost 5%.
Right.
And some of these stocks are up 20%, 30%. Like Alibaba, one of the Chinese stock, is up over 40% from its 52-week low. So we had this move. So to me, looking at the market right now, right, I'm now watching. I'm in this wait to see kind of mode to see over the next week or two. To me, it's a critical 2 weeks. Because I want to see if the market can hold on to its gains, right? And we're still having these headline risks out there, right? Where you still have Ukraine, you still have, this stuff coming out of the Fed. So the next couple of weeks, to me, is going to be very critical on a shorter term time frame of the overall market. But it goes back to the last conversation we had, and the last conversation was that you have a great list of stocks, right? And I just threw out a bunch of stocks, and I want everybody that's watching this, go and look at the stocks that I was talking about and go look at stocks that were down 40%. Like we have a screener on our tactical income trading platform that all our subscribers have, where you can put it in and say, hey, what stocks are down 50%? What stocks are down 20%? What stocks are up 10% from areas, right? But what I want you to do is I want you to go and look at those stocks. And then I want you to look at the stocks that we talked about, the Goldman Sachs of the world, the Apple, the Microsofts, because when you're not trading as much as I do, when you have opportunities when the market sells off, you're supposed to kind of, and I know people hate this, but if you're not watching the market, there are better times to put your money to work. And when markets are down 20%, that's when you put in a little bit of money. When people are investing, one of the biggest mistakes new investors do is they go too big, right? And then they blow up their account and then they blame it on the market, or they blame it on trading, or they blame it on options, instead of realizing that there was one little thing. If they would have just started small, right, and keep it small so they don't hurt themselves.
Yeah, I just talked to Caleb yesterday. He's my crypto guy. And, we do all the tax liens together. And I got him into crypto in 2017, and he's just taking it like a banshee. And he says, he's got 7 golden rules. And he says, don't buy a green candlestick. Don't buy into that. Buy when it dips. And make sure you sell when it's going up. He says people get all emotional about it. And it's like we've been taught in the stock market when I was back there in the day, is do exactly the opposite what the trend is doing, almost, is what you're saying, because the knee-jerk reaction is, and everything dropped 40%. But I mean, it was literally 2 weeks ago that you and I had that interview. But when I saw you in Utah, and we just really quickly
put a little money to work, and that's what I'm saying now. So now you look at these stocks coming off their bottom.
Yep.
What you're going to do, you're going to see over the next couple of weeks, if they start to hold here, right? And now this is a little bit of a macro. Not many people can do this, and I understand that. But if it starts to hold, you could put a little bit more money to work, because there are still these stocks, right? When you look at the ones that I'm talking about, they are still down a tremendous amount, right? So you don't want to have the reaction. And this happened to me in 2000, and I have a little PTSD from this. The market from the NASDAQ market dropped from 5,000 to 3,200, and then had this massive rally. We bought that massive rally. We were like, oh my God, this is the buy, right? And we went all in. And what ended up happening, yes, it rallied over 15% up, right? We made a lot of money from the 3,200. Then all of a sudden, it slowly went over and it started to go down. And then it went down over 55% to 60%, right? So what I'm saying to people is you have to be really cautious in here. That's why you don't go all in. You don't put, hey, this is the bottom. Everybody's calling. I heard yesterday on TV, everybody's saying this is, I don't know if it's the bottom. Right? We won't know for a few weeks, maybe even months, right? But there is going to be certain clues, right? And that's what I'm saying. Wait the next 2 weeks. If you didn't do the dollar cost average and into the down move recently, now we just had a 5 to 6% up move. Let's see what it does over the next 2 weeks.
So what I would be looking at, and let's just both chime back and forth on this, is when you're saying what's happening over the next couple of weeks. What I would look at is this, and again, you guys, both Jeff and I are avid. We look at all the papers. We look at all the stuff that's going on. Back, papers, that's dating ourselves. But I mean, I used to read 6 different newspapers on a regular basis.
Yeah, we don't have those anymore, Sean. You got to update.
I know. We get the news bundled in, but China did an op-ed piece in, I think it was the Washington Post or the Times. Did you see that, where they were saying, oh yeah, we didn't think that Russia was, so they're backtracking on their support of Russia, and I really want to see how far that goes back, because there's a lot of this, we're going this way with Russia, and I don't think that's going to really happen, which goes back to your Taiwan conversation, which, I mean, immediately when Russia went in there and I saw how quickly Europe lashed out on the economic sanctions on there, I went, this is going to be a lesson to China, because I don't think that people realize if we pull that trigger, China's economy will be shut down. It'll hurt us also, but it will be shut down. So that's what you're talking about over the next couple of weeks.
Exactly.
Not just that, but there's also the Fed buying, not buying.
Oh yeah, I left that out, Sean. That's a great point. And what people don't realize what happened this month. One, not only did the Fed raise interest rates, but they called this thing tapering, right? They were buying mortgage-backed securities and bonds for the last. And when I say buying, guys, they were buying hundreds and hundreds of billions of dollars of this stuff, right? And it stopped this month. Right in March, it stopped. And the last time it happened, the market really sold off and there wasn't enough liquidity in a bunch of these markets. And liquidity just, means that, hey, I could get in and out of a position and I can buy this where I need to buy it at prices I want to buy it.
Right.
When there's no liquidity, you can't buy it at prices or sell it at prices that you want. So to me, we have all this stuff going on. I kind of am watching that to see what happens in the market. That's why, yes, we had this nice bounce and everybody's getting, all right, maybe this is over. I'm not so certain. So that's why I like to take a much cautious view.
Yeah. Yeah.
because
I like that.
and it was what Sean just brought up, I think was key. I, as a hedge fund manager managing, over $100 million, I actually took a lot less risk out over the weekend because the weekends become really important to me because I don't have the ability to protect myself and protect my portfolio because the markets aren't traded. So
Right.
I actually went out with a lot more cash this weekend because of the China thing. And I like what Sean said is that China is now being like, hey, we might not want to help Russia, right? Because they can see. And to put this in a little perspective, China has been having their growth in their country has been slowing over the last 2 years, 3 years. So the premier of China can't take the risk of helping Russia, and then all of a sudden the United States and the rest of the world. And the biggest thing, Sean, that we didn't talk about, that what I was impressed with, it wasn't just the government that the governments around in the democracies that said, hey, we're not doing business with China. It was individual companies.
Yes.
They were like, you know what? We're done. We're done. We're done. We're done. We're done. And to me, that is a warning for China, because if these individual companies start to pull out, even though it's a huge revenue source for them, I'm kind of curious, will they do the same in China? It looks like they might, but obviously China's a much big revenue source. But I was very impressed by some of these companies.
Absolutely. Absolutely. So with that being said, folks, be cautious on what you're doing out there.
Yes.
This is what I call a head fake. Look, I am a big proponent of looking at the news. I'm not a big proponent of looking at the bullshit manipulation that goes with all the, political stuff. You've got to read between the lines. I was at a political fundraiser in 2008, very small. It was in Boca Raton, a lot of money in there. There was the highest ranking Republican in the Clinton White House that was sitting there. He was 82 years old, Sheldon. And when I found out, I was like, oh my God, I realized who he was. I sat and grilled him for probably 40 minutes. He was like 82 and couldn't move. So he was stuck with me, but I just started hammering him all the stuff that I was reading. He says, Sean, this is the most important thing that somebody has talked to me about watching what we're talking about right now. He says, you can't watch the front page. You have to watch what's happening incidentally around there. And a good example of that would be the op-ed piece that China put out a couple of days ago. They're sending out signals of where they're going. When it hits the front page, it's already happened. And Sean, so just look at a little bit of all this stuff and see what's happened. Isn't that what we're kind of saying here, Jeff?
Sean, I can't. And as a market participant what I say is price is language. Price is telling you something. And when people, I get a lot of subscribers and a lot of students say to me, oh, you got this going on, you got this going on. And I say, when you want to shut that noise out, all you do is you look at what the price of that asset or that stock is telling you. It will be telling you the truth, right? Of what is really happening and how it's reacting. And if it's reacting on, like a lot of bad news comes out and the stock goes up and people go, why did it go up on bad news? It's because it's really not that bad of news and people are buying this stock. Or why did the stock go down on good news, right? That is, price is a language and it's trying to tell you something. You have to keep your antennas.
And it doesn't lie. I mean, Jeff, I'm going to tell you this. We're going to get a little spiritual or cosmic on this, but prices in the market literally are a language in so much as there's predictability in it in a lot of these, Fibonacci, I'm not going to get into all that, but there is mathematical harmony, so to speak, in that, because of what the market is seeing in the overall climate out there. It reflects it. It never does 100%. Not reflect.
And we teach this stuff all the time. We call it clues, or getting an edge and understanding where to look to find that edge. And I've been doing this for 25 years. And I learned this very early on. It was like, wait a second, bad news came out and this thing is 10 points higher. And you're like, what gives? And then when you start to understand why that is happening, you can pick up on it. And that's why I always we teach about going from the macro to the micro, because the micro is where you're going to get the little tidbits. The macro, you get these ideas, but maybe it goes the opposite direction of the micro. Right. You're like, wait a something bigger is going on here.
Right.
And then you're able to make a decision on that and a smart decision. So there's a lot going on. That's why, not to say that this market's not going to go higher, or it's not to say it's going to go lower. What I'm saying right now, I am in that wait and see mode because it already had the big move off the bottom after going 40%. We have a lot going on in the overall market. Now I'm there watching for these little clues to say, hey, I'm going to get more confident getting bullish, or hey, I'm going to, this is going down further. I'm going to start taking some of the eggs off, taking some of my money out of the market and see where it goes from there.
So let's do this. Also, inside the descriptions down below, I'll put a link to Tactical Trade and what you guys do there.
Yeah, tacticalincome.com. You go there, you can see what we do, and it's very helpful for people.
Yeah, we'll go with that. So with that being said, we got a lot of information here. We have fun. Obviously, this is literally, I had to push record because Jeff and I are just sitting there talking, dude, we got to hit record because this is what they want to hear. They're sitting into our little power room conversation. And if this doesn't illustrate that you are who the people you hang out with, I don't know what does. So, with that being said, Jeff, I appreciate you jumping on here. Again, you guys like what Jeff has to say. He's going to be on here more often, and we'll get you that. So appreciate the comments, the ring the bell, all that good stuff. Absolutely, Jeff. Absolutely.